Hi everyone, FinalBoss here. Today we're going to be talking about the only thing that matters in day trading. This is our little secret that we're going to share with you starting now.
All right, guys. So last week, I'm not sure if you guys were here, but last week we talked about the need for traders to think differently than all the other market participants. Traders are not glorified investors. That's the point we were making last week. Traders recognize then that market analysis, it's helpful. It's a helpful piece of the puzzle, but ultimately, traders must think statistically, right? They attempt to find observable, quantifiable, repeatable, statistically reliable price behaviors in the charts. And then they take measured risks to achieve greater rewards than they risk, right? So today, in our first module, we're going to talk more about that phenomenon. I titled it Risk, Reward, and Win Rate. And I gave a very bold subtitle. It's the only three metrics that matter. You can explain all trading in just those three metrics, right? Risk, reward, and win rate. In order to explain this, I wanted to start by talking about an imaginary coin flip game. All right. And here's how the game will work. It's a perfectly balanced coin. It's a 50-50 coin, right? So there's no advantage to either heads or tails. It's perfectly balanced, 50-50. But the rule is, if it's heads, you get $10. But if it's tails, you pay $1. All right. And examining these rules in this coin flip game, the natural question is, would you play this game or not? I think if you're thinking rationally, you'll realize this is the best game ever. I will play this game forever, as long as I'm able, right? You get $10 if it's heads, but you only pay $1 when it's tails. It's a 50-50 coin flip. I'll play this until you disallow it, right? I'll play it until the casino closes. I'll play this forever, right? That's what you'll say. And whether you knew it or not, you were already thinking in terms of win rate, reward, and risk, right? You recognize that the risk is only $1, but the reward is $10, and you have a 50-50 coin flip, right? You know that even if you're to risk $1 and lose, risk another dollar and lose again, perhaps lose a third time and a fourth time, if you had confirmation that this was a 50-50 coin flip, even after a fifth loss in a row, you would still play this game forever and ever and ever and ever. Because you know that that would simply be a 4 or 5 loss win streak. But the moment you win, even one time, it'll overwhelmingly account for all of those losses and more, right? You're already thinking in terms of risk and reward in this coin flip example. Now imagine if I were to change the numbers a little bit, right? Oh, and by the way, this shows incredibly positive expectancy. This is extreme positive expectancy, right? 10 to 1. What about something like this? Imagine if it was a $1 reward, $1 risk. So there's no benefit, or there's no greater reward than if you lose. But you were able to somehow change the win rate for the coin. Perhaps it's weighted so that you have a greater likelihood it'll be head than it'll be tails, right? Imagine if it was 60-40, and yet every time you won, you made $1, and every time you lost, you lost $1, right? If you played 100 times, you would expect you'd made $60, although you might lose $40, and the net profit would be $20. You still have positive expectancy because your win rate is higher than 50%, and yet you risk $1, you make $1. Still positive expectancy. How about example number 3? Here it's really close, okay? In this situation, you have a $2 reward with a $1 risk, right? And the win rate, though, it's deeply against you. You have a 30-70 chance, right? 30-70. Now, you'd have to be, you'd have to know the math, but the exact win rate that would allow you to have a break-even expectancy would be 33.333%, right? Given that you have only a 30% win rate, surely this is a negative expectancy system. You don't want to play this game. Although, every time you win, you'll feel great, right? You'll feel great. But if you were to play this for 100 coin flips, 200 coin flips, 300 coin flips, it would be impossible for you to maintain a positive expectancy, right? Here's a funny one, the last one, all right? It's a funny one, and yet it's an ironic one. Here in this situation, you have a 99% win rate. What that means is you're winning all the time. I mean, constantly. I mean, you rarely lose. And every time you win, you make a small amount, $1. So you've done 15 trades now, and you've won every single time. You've made 15 positive trades in a row. But here's the catch. The one time you lose out of 100, you lose $10,000. Now, I would ask you, would you play this game? This game that clearly has a negative expectancy? And I think when thinking logically, you would say to me, of course I wouldn't play this game. This is the dumbest game in the world. Because even if you win 99 times in a row, having earned $99, you just have to win. We just have to lose once. And it blows all your losses and more and way more, right? The irony, though, is that about 90% of traders trade exactly this way. They engage in strategies that literally look like these numbers. They win constantly, but they're risking so much to try to win that $1 reward. And the one time that they lose and they can't get out of that loss, it's what blows them up. They lose all their money and more. And that's why this coin flip example number 4 is not only a negative expectancy example, but it's ironic. It's ironic. Though when you look at the numbers, you know it's irrational. The reality is human behavior engages in this constantly. So then what is trading really all about? It's about win rate, reward, and risk. These 3 metrics indeed. Or let me put it a different way. It's about finding high probability opportunities on the chart that pay a bigger reward for the risk that you took on that trade. And so here at OMBA, what we want is a win rate that's greater than 50%. All right. I mean, you're doing technical analysis and you're doing market analysis and you're trying to improve that win rate to the best of your ability, right? You can follow many of our moderators. A lot of them are great at technical analysis. They have a keen understanding of the markets, but there's no way they're right every single time. What we're trying to achieve is higher than 50%. And we want a higher reward than not, right? We want a higher reward than not, at least 1.5 R, right? What do you mean R, you might ask? Well, my risk is going to be 1 R. If I'm going to risk $1, I want to know that I can at least make $1.50 if it goes in my favor. And I should have the confidence that it will go in my favor more than 50% of the time. And if I can beat these baseline metrics, I mean, this is the bare minimum, right? This is the bare minimum. This is for someone who's brand new. This is your first goal. Then you should be, over time, a profitable trader, right? Some of the moderators think purely in these terms. I think purely in these terms. And for me, I don't really care if I lose, because when I lose, I only lose 1 R. But when I win bigger, and I win more often than not. And this is how you should get started as well. And here's a chart on the right that will help you, right? If you have a 2-to-1 ratio, meaning for every $1 you risk, your reward is 2. You can see that row right there. You simply but have to win more than 33% of the time in order to break even, right? If you're getting a 1-to-1, like you're risking 1, In order to make one, well, you just have to beat 50%, right? Of course, you can go to the other extremes, like you can risk 50 to win $1, but you'd have to win more than 98% of the time. And on the other extreme, you might risk 1 to try to win $10, but you'd have to win more than, I mean, you're not going to win very often at all, is the idea, right? And so you want to avoid those extremes. Those are extremely difficult to target, and it's very difficult on human psychology. You're not going to have a very fun life. So I think a reasonable goal is to have a 2-to-1 reward, right? Meaning you risk $1, you have a $2 reward every time you win. You try for that, you strive for that, and you're striving to hit more than 30% minimum, trying to hit more than 50%. If you can hit 50% and then get a 2-to-1 on every single trade, you will be a wildly profitable trader.
Thanks for watching. Hope you learned a thing or two about risk management. Consider joining us at Owimba Trading, where we do this live every day. See you in the next video.